This is the final warning here, okay? And really, if you're ever going to turn your friends and relatives onto what we do, which you know is unique, okay? Everybody out there saying, yeah, deep correction, but the Fed's got it under control, and the Fed, nobody is ever going to tell you when a crash like this is going to get worse. All the signs are there that we put in a top. This is not another correction, okay?
Harry Dent Jr. is a renowned financial analyst and best-selling author famous for his dire predictions of economic recession. In his newest interview, Dent warns of an impending economic collapse that promises to be the worst economic disaster in history. With his long list of accurate predictions and his expertise in economic forecasting, Dent's predictions about the future of the economy could have serious and far-reaching implications for the entire world. Welcome back to Savvy Finance. In this video, Dent takes readers on a deep dive into the underlying economic issues facing the global economy and provides his expert analysis of what could happen if we don't take measures to prevent it. Please watch, like, and share this video. Also, drop your comments and thoughts below, and remember to subscribe to the channel for more related content similar to this. We begin with a short clip of Harry Dent.
Hi, Harry Dent here for the rant on December 30th. Here we're coming into the end of 2022. Why was this an important year for the markets and for my forecast? We finally saw that first crash off of this bubble that's been extended since the 2009 lows, and central banks just saying we'll print endless amounts of money, which they did until they overdid it and finally had to tighten some, okay? Well, that's enough for the markets to get scared because they've been running on nothing but stimulus since 2009, okay? The whole boom from that into the late 2007, I was the one that predicted that the earliest. Baby boom generation, greatest boom in history, okay? It was over after that. 2008 was a serious crash, did look like 1930, the next Great Depression, for good reason, and that's what got the central banks panicking. So they've been printing money wildly ever since. Well, 2022 was important because we had finally got that first crash. I studied all the crashes back a couple hundred years since we've had stock markets, and it basically says a bubble doesn't burst until you get at least a rapid 28% crash, and better on average closer to 40%. Well, we finally got that into June 2022. NASDAQ down 34%. And the fact that that went down farther, down 38% more recently, just confirms that even more. So I've been saying this finally clearly looks like a top. So now your strategy is selling on bounces if you didn't. And I gave my strongest all out, two of them, clear sell signals, all out sell signals for stocks in December, just before the January 4th peak in the S&P, and just after the November 22nd peak in the NASDAQ. So we did warn about this, but there's still people I know that have positions, and you still got friends out there that don't have a clue of what's going to happen, and family members. So this is the time to get serious, again, about getting out of risk assets to the degree you haven't, getting into those safe haven treasury bonds. It's not going to be gold. Gold has held up as usual reasonably in the early stages of this, but that's what it did into the first half of 2008, and then it crashed almost 50% with everything else and went crying for mommy. So you got to get serious about being extremely defensive now. And you got relatives and friends that you know are not taking this seriously, and most people still aren't, you need to warn them now.
In the video, Harry Dent discusses the importance of the year 2022 in the markets. He mentions that it was a significant year because it saw the first crash of a bubble that had been extended since the economic downturn in 2009. Between 2009 and 2018, the Federal Reserve kept interest rates at historically low levels in an effort to stimulate economic growth. This policy had the unintended consequence of creating asset bubbles in both the stock and housing markets. In December 2018, the Fed began to reverse course by gradually raising interest rates. This caused the stock market to experience a significant correction in late 2018, and many feared that the housing market would follow suit. However, the housing market continued to boom even as interest rates rose. This was due in part to the strong job market and low mortgage rates. However, with time, the housing market began to cool off. Sales of new homes slowed down and prices began to level off. This led to a more prolonged downturn in the housing market, which now has ripple effects on the economy. Central banks, according to Dent, have been printing an excessive amount of money since then in an attempt to stimulate the economy. However, Dent believes that this bubble has finally burst, with a rapid 28% crash in June of 2022 and a more recent 38% crash. He advises that it is now time to be extremely defensive, sell risk assets including stocks, and invest in safe haven assets, such as treasury bonds. He also advises warning others who may not be taking the situation seriously. Listen to these carefully.
Again, what have we seen here? At first, 34% crash, okay? And then a good rally, okay, perfectly. That's the two wave off the one wave crash. And it didn't go anywhere new highs. Another good sign. Then we see another wave down, two new lows. A great sign. That's the beginning, should be the beginning of the larger and probably most forceful third wave. This is the one that's going to hit people the hardest. And by the time people wake up a few months from now and say, oh, I should have sold, it will be too late. This wave should take us down 55, 60% from the top instead of 34% in the NASDAQ and things like that. So again, this is the final warning here, okay? And really, if you're ever going to turn your friends and relatives onto what we do, which you know is unique, okay? Everybody out there saying, yeah, deep correction, but the Fed's got it under control, and the Fed, nobody is ever going to tell you when a crash like this is going to get worse. All the signs are there that we put in the top. This is not another correction, okay? We should have crashed longer and harder into 2009 and 10 even, but central banks stopped that. Well, they threw everything they had at more than I or anybody would have ever forecasted. They overreacted, and that's precisely why they finally had to tighten again. And they're thinking, since the economy's been strong, that it's because it's strong. No, it's all been stimulus. So you know my view with the stimulus, if they just took the stimulus to zero, but no, they are actually tightening.
Dent warns about an impending financial crash or market downturn. He mentions that a crash has already occurred and that there was a subsequent rally, but that a larger and more forceful third wave is coming that will be more severe than the initial 34% crash. He then suggests that this third wave will take the market down by 55 to 60% from the top and that it will be too late when people realize that they should have sold. Dent attributes the impending crash to the actions of central banks, who they say has been using stimulus to prop up the market, but are now beginning to tighten, which will cause the market to crash. He also implies that this crash will be worse than the one that occurred in 2009 to 2010. What do you think about this statement by Dent? Kindly let us know your thoughts in the comment section below. Listen to these carefully.
So my view is the economy and stocks are not going to react to this well, already haven't. Already looks like we're moving this third way. All we need is a real clear break to new lows at this point. Okay, 10,088 is the line in the sand on the NASDAQ. That's just 4 to 5% away. We could be there in a heartbeat. And looks like we're breaking into that third wave more decisively, which means you got to break into the third wave of the third wave. So I don't want to get too confusing here, but the January issue will spell this out more. We are going to keep giving updates. There couldn't be a more important time. And again, people who are not subscribers, if you're serious, and you don't have to be serious, but if you're serious about this and you have assets to protect, if you're going to get on our newsletter, now's the time to do it, and now is the time to tell your friends, okay? We are 4 to 5% away from this crash becoming even more obvious than it already should be, and then people really start panicking when they realize, oh my God, yeah. There is no rescue, there is no new high coming, and it only looks like stocks are going lower. I think we're very close to that moment. You just need to be that one step ahead of it and get your friends and relatives to do the same thing as much as you can, and we're happy to help you with that.
Dent believes that the economy and stocks are not going to react to a potential crash that is approaching. He mentions that the NASDAQ is currently about 4 to 5% away from a new low, and that this crash could become more obvious soon. Dent recommends that people subscribe to their newsletter, and others who are serious about protecting their assets should pay attention to this situation and potentially take action to protect themselves. He also mentions that people may start to panic once they realize there is no rescue or new high coming for stocks and that they are likely to continue to decline. He then advises people to be one step ahead of the potential crash and to encourage their friends and relatives to do the same. There are a few key things that can be done in this situation. Firstly, it's important to diversify your investments and have a mix of different asset types. This way, if one asset class takes a hit, you've got others to fall back on. Secondly, it's crucial to have some cash on hand so that you can take advantage of opportunities when they arise. Remember, whoever has the most cash always wins. Finally, stay informed and ensure you understand what's going on in the economy to identify potential warning signs. By following these steps, you'll be in a better position to weather any storms that come your way. Dent's predictions have been met with praise and criticism, but his warning is something that investors and economic watchers should pay attention to. While it is impossible to know for sure what the future holds, Dent's predictions could be a sign of things to come. That's all for today. Remember to hit the like button and subscribe to our channel. Also, remember to turn on the notification button so you can get to see more related content like this. Thanks for watching.